Hey everybody, Economic Ninja here. I want to talk to you today about real estate. And for the last 6 months, I've been talking about the real estate crash. People prepared for it. Start to look, open your mind to the larger idea of what real estate cycles are, how they work, and learn how to be patient through the up cycles, and then just be greedy and buy up everything you can on the down cycles. Now, one thing I haven't talked about, because I talked about the top of the real estate market coming in, I did a video the third week of July. I'm in California. I'm in one of the hottest markets in California. And good news is I was able to nail it. I don't nail them all, but we saw right after that video, inventory literally explode 300% in my area. Um, Days on market are expanding heavily and prices are starting to come down. Now, with that being said, and I do believe we're going to see a period of real estate sales cooling, especially in the hot markets. And it sounds funny, I do these videos and I always get somebody from Idaho or Florida or these hot markets that are outside of New York, California, and they're going, my area is still exploding. You have to understand this fundamental, real estate fundamental right here. There are certain markets in this country that lead. They lead on the upside and they lead on the downside. When they go up and they start to crest, they plateau and they start to go down, there is a lag time. There is a distance of time that exists that the buyers that stop buying, let's say in California, they stop buying in other states. Now, we are close to that time because there are places all over the country that are becoming so expensive it almost doesn't make sense now to leave, let's say California, and go to, let's say, somewhere in Texas, because yeah, I could get my house cheaper, but when you add up the amount of property tax, you look and you go, okay, where am I at here? So the highest of high homes in California have topped. They're starting to come down. And so that means there will be less buyers going throughout the country trying to find deals. However, and this is at the top of any real estate market, you'll see the places where you never really wanted to go in the country. You're like, this isn't the most ideal, but you know what? It's cheap, so we got to go. You'll see those start to top out when those start to fail. Those real estate markets start to go down. And I'll give you an example. In California, there's a town, well, in Arizona, near Lake Havasu, called Mojave. This is Mojave County. And in the last real estate rise in 2007, Mojave County would explode because Lake Havasu was getting so expensive. Bullhead City was getting so expensive, and people would start going, okay, well, I can't afford those. All right, I don't want to pay those higher prices, so I'd move into Mojave County in the outlying areas around those areas. When those started, the sales started to wane, and when the sales started, the days on market expanded, that's when you know the really big markets are everything's starting to come down. So this is long-winded, I apologize. Here is the point. There are two scenarios in which real estate can actually explode in value. That is, number one, the Federal Reserve can lower interest rates into negative territories. Now, before everybody jumps on, their thumbs are moving super fast to try and comment, it is possible. I will tell you that I do believe that is definitely in their playbook. However, they will not do that until other countries around the world are going into negative territory, okay? Because the Fed does not want the US dollar's reputation, as bad as it is right now, to be even worse. And so they don't want that. So as other countries are going, their economies are imploding, their currencies are imploding, like Turkey, it's going to get bigger and bigger. It's going to move into Europe, and they're going to start forcing rates into negative territories. The Fed will be lowering rates, okay? But a crisis has to happen for that, okay? Now, number two, and that's going to cause a flurry of buying and refinancing. Obviously, the lower rates go, refinances happen, people can afford more home for their monthly payment, so they dive into other homes and they bring the prices up. Now, number two, this is, if you made it to this far, I can guarantee you're going to be blessed, because this is something that no one's ever talked about and nobody is ready about, nobody could even fathom. But this is what I believe is going to happen. And I believe it's going to happen in a few years if we see a housing continue to rise. And housing doesn't actually have to keep rising for this to happen. Just inflation has to keep rising. So housing could actually start to stagnate, but the cost of eating, the cost of just living keeps going up. The government will start to look at the 40-year mortgage product different. Most people don't realize the 40-year mortgages are actually alive and well. They're out there. The problem is today's rate, where you can get a 30-year rate, let's say at 3%, a government conforming loan, a 40-year will run you around 5% for loaning money that long. And I believe you're going to see the government flip, and the 40-year will now become the new 30-year, which means that the rates will come down to the normal 30-year. So give you an example, all of a sudden they come out and they say, okay, we have come out with this 40-year bond, or this new bond product, sorry, that essentially would make a 40-year mortgage around 3%, 3.25%. And it wouldn't be that drastic overnight. It would probably be like, if it happened today, they'd probably say, hey, 30 years are 3, let's make a 40-year 3.5. Now there would have to be a crisis. Inflation would have to be getting really strong for this to happen. But remember, a long time ago, mortgages were 7 years. Then they moved to 20. They had this progression of getting to 30. And it has to line up with this whole theory of, and it's not a theory, they're actually telling you by 2030 you'll own nothing and like it. Almost like a rent to own kind of situation. And very few people will be able to rent to own, because inflation's so big, and they've got you on the dole, just enough cheese to keep you happy and content, because you don't got to go hunt, but you have no idea that you're a slave. When this happens, Ninja Nation has to be ready, because you have to understand what will happen if the government changes the 40-year product and makes it similar to today's rates. There will be an explosion almost overnight, but it won't be overnight, of home prices. Because what will happen is everyone will immediately start to refi. They'll realize all of a sudden, oh my gosh, my payment is nothing. I've just saved like 30% per month on my payment. And what they'll immediately start to do is they'll start hunting for homes. They're going to go for that bigger home, because human beings can't help themselves. They have to be greedy. They gotta look better in front of everybody else. And as Ninja Nation, you want to be prepared for that. You want your finances lined up, because that is going to be a situation where you are going to want to dive into real estate. And it can be scary, but you want to be set up to where your finances are rock solid. When this happens, you're going to want to do it properly in the right entities, legal entities, and all that stuff to protect yourself. But it will become a speculator's dream to buy real estate in that kind of scenario, especially single family 3-2 homes all over the country, especially in really good locales like California. It's going to cause them to explode, but it won't happen overnight. But it will feel like to you it'll be overnight, because you were ready. You were already starting to get mentally prepared for this. And instead of going out and buying a new truck, you were saving up that monthly income to be able to go and get an investment property. So now, with that being said, none of this is investment advice, okay? I'm an investor. These are the kind of things I look at as massive opportunities. I'm not telling you that the 40-year is going to turn into a 30-year rate overnight. There has to be catalysts, and that's what makes a good leader, a good CEO of a company, a good CEO, because they use trigger points, they have plans, they have algorithms that they follow to all these different scenarios. And when the world changes, when the breeze changes direction, they know which way to go, because they've already planned for every possible scenario. All right, guys, I hope you got something out of this. Hashtag real estate shows me that you guys made it all the way through. I really appreciate it. Share this video anywhere you can. If you haven't subscribed, please consider subscribing, hitting the thumbs up. It helps me get the information out. With that being said, I thank you so much, Ninja Nation. The Economic Ninja is out.